Hi, and welcome to this week's Mortgage Broker broadcast. My guest this week is Wealth Protection Advisor Adrian Benjamin, and I wanted to get Adrian onto the podcast. Two real reasons. One is to talk about business protection because I really do believe there is a gap in the market with regards to mortgage brokers, protection advisors talking about business protection. And I wanted to get him into the podcast to talk about what he's doing, how he's working with his clients, really identifying that business protection is only 1% of the market. So, so really how he's looking at helping company owners and his sort of stance and take on business protection. So that was one reason. The second reason is that he's also educating brokers as well. So he has got that abundance mentality. He is trying to help other mortgage brokers out, which is quite unique in the industry from a mortgage broker point of view. So I wanted to get him onto the podcast as well to talk about that and look at both sides of things of educating clients and also educating mortgage brokers. So yeah, let's just get Adrian onto the podcast. You're listening to the Mortgage Broker broadcast with me, Craig Skelton, the podcast which helps mortgage brokers at all stages of their mortgage broking career. So welcome onto the podcast, Adrian. How are you?
I'm good, thank you, Craig. Thank you for inviting me on the show.
No problem. Thank you for agreeing to come onto the podcast. I'm looking forward to talking about you and your business and your journey in financial services. The beauty of it is we've had a bit of an exchange in messages on LinkedIn, but no meaningful conversation. And I always like that in terms of coming into the podcast because I've got no preconceived ideas about you. So hopefully the conversation will flow. I've got loads of questions and thoughts and things like that. But yeah, just thank you for agreeing to come onto the podcast. So for those people that don't know who you are, do you want to just do a quick introduction about yourself?
Yeah, so thanks for that, Craig. So I'm originally from Manchester. Been in London for about 10 years now. So when I finished school in Manchester, did university in Birmingham, and then when I graduated, I did investment banking in New York for a year. And then once I've come back, I've been in financial services for like over 10 years now.
Right. Wow. That seems like a bit of a journey in terms of from your background point of view. So you're originally from Manchester and moved further south. I didn't see that from your LinkedIn, to be fair.
Yeah, it's at the bottom. It's been a while, hence the accent isn't as strong as it used to be. But yeah, been down south for a while now.
Yeah. Yeah, you definitely how old were you when you left Manchester, Adrian? How
So I was 18 when I left Manchester,
right, okay. Oh, there's
and
a little
then
bit there. The
a little
more
bit.
conversation, there is a little bit in terms of your northwest
Yeah,
accent. So
yeah. If I have a beer, it comes up more. I've been told. So yeah.
that's the same for all of us. People
Don't
try
worry, I've got water today. Don't worry, it's
yeah.
got water.
Yeah, it's not quite right for me. I've got tea, so yeah, and there's nothing else in
Yeah.
this mug. So apart from that, so yeah, it's. I'm guessing the Manchester United will come out then. So like I said, thanks for agreeing to come on to the podcast. I wanted to, obviously, we connect on LinkedIn and message each other a few times, and one thing that struck out for me about your LinkedIn profile was obviously the Wealth Protection Advisor title kind of thing on there, and I think that's the reason why I can see the awards and the things that you've done, but I just wanted to explore that side of, well, that more because
Yeah.
there's a lot of brokers that don't, like obviously you specialize in niche, and that was that something that you always wanted to do in terms of the wealth protection advisor side of things?
Good question. So even me getting into protection is a bit of a long-winded story, so I'll chop it down a bit. So when I went to uni, I did business studies, and then I realized I wanted to get into the bank because I thought the bank's got all the money and it's a job for life. Back then is what I thought. So doing investment banking in New York was a great experience for me. Just for the fact that you're living abroad. I'm working for UBS, Swiss Bank, who are one of the biggest investment banks in the world. It's mid 2009, so like kind of mid financial crash. So seeing that firsthand from a corporate perspective, and then it's my second major job, has really helped me, and I think that's really helped me in protection as well. And then when I moved back to Manchester, I did recruitment for a year in financial services, and then I moved to Royal Bank of Scotland doing invoice finance in their corporate division. So that was great again, just to see how banks lend and the criteria for that. And then I moved to London where I worked for a fintech company. And then I had some contract positions after that. But what I think's really helped me in my protection career is when I worked for HSBC with Accenture. So when the financial crash happened 2008, 2009, the Financial Conduct Authority said they have to separate the investment bank from the corporate and retail bank. So that project was all about risk. And from then, this is kind of how it's led to me getting into protection, where a lot of people think profit and revenue first and protection and insurance like not at all or last. So me working in my corporate career of looking at risk from a financial perspective has helped me really well in protection. And then I've did a couple more financial risk projects for Bloomberg, their KYC project, and then Deloitte as well. And then I set up my own property business on the side as well when I was consulting. And the three things that property investors always looked at was rental income, capital appreciation, and then passing the properties on to the family. And the third bit, no one ever thinks about, especially from the mortgage perspective. Now, a lot of people feel you have to have a mortgage to have life insurance, which actually isn't correct. But the reason why people take out life insurance is because the mortgage is a big debt. So that's the bit that I specialized in, because a lot of people, they get into property for, to try and get wealthier and pass it on, really. So that's kind of how I've kind of de factoed into protection, even though I've been doing financial risk my whole career. So that's why I specialize in, really.
Right, okay. I think like to drawing on your experience of you've had quite a corporate background. Is that fair to say, Adrian? Yeah. So you're
Yeah.
nodding along with that. So in terms of it's the thing with corporate, would you sort of say that from your point of view, you've learned things that have helped you with regards to protection in your business now from a corporate point of view?
Yeah, massively. So even let's say you take out a mortgage from me, I'm gonna check your background, check your credit history, check your pay slips. Like that's all risk, that lenders do every single day. And it's letting the general public know, like think more like a lender or a corporate, like have risk as well. So with your business and let's say yourself and your health, if anything bad happens, making sure you're financially protected. So that's what I say to all my clients: think more like a corporate or a lender. And also with the mortgage as well, if you don't pay it for whatever reason, the lender can take it back off you. Now that's basically insurance. So it's in our faces every day, but no one really looks at it like that.
No, that's the thing with protection.
Yeah.
It is about educating clients because they know they need a mortgage, and that's the big debt that they, like you say, you're talking about there with regards to the cover and the risk that's involved with taking on the large debt. And but then they don't always look at, like you said, the cover side of things. They'll look at take what that the mortgage brings, whether it's a home or commercial property or whatever that looks like for them from a buy to let point of view. They'll sort of see all that the good side of it, but they never. It's more often than not that they'll not see the risk element side of things and what happens when one of the parties is not here, one of the parties is no longer employed or have a long-term serious illness or anything like that. So is it for you from a is it about educating the clients more? Is that how you feel?
Yeah, I think there's a saying that, insurance needs to be sold, which I hate that saying. It's just, educating people on it. Once they're aware of it, then they'll see the value in it. Now, a lot of my clients are from the property industry, and a lot of them will have large buy-to-let portfolios. And what generally happens is, number one, they probably don't have insurance, or number two, if they do, it's just on the residential. So I just say to them, look, your portfolio is worth X amount, like that's still at risk if anything was to happen to you. So making sure that they insure not just the residential properties, but the buy-to-let if they've got any commercial or business loans as well, basically.
I think with regards to how do you find that we're trying to educate the portfolio landlords and the people that are doing the buy to lets? Because I know from being in financial services for quite some time and coming from a large corporate background, from like, in similar ways from your point of view, I always sort of see that the buy to let investor doesn't sort of see the mortgage as a risk. It's not they understand why they're doing it, but is it always about education from that point of view?
Yeah, it is an education piece. Sometimes it is quite difficult, but then the example I gave to you before, like the lender, whoever they are, they're always protecting their best interest. And in some situations, if you're buying a buy-to-let property, the lender will say you need to get buildings insurance, or else you don't get the money. So that in a nutshell is, protection. So why is the lender doing it? You're agreeing to pay for building insurance to get the mortgage, and then you don't protect yourself from not even you passing away with life insurance. If you become sick and you can't, pay the mortgages, even if you do have tenants, they're paying the interest on that loan. They're not paying the capital, which you're responsible for. And it's just making people be aware of that, really.
And is it like, and is that an easy thing to make them aware of the consequences and that education piece?
It is sometimes difficult, but I think social media has helped me quite a lot. I go to a lot of property events, every week. I've been in the industry for a couple of years now, so that has helped with credibility as well. I sponsor Daniel Moses property events as well, so they know that I understand it. I have my mortgage CMAP qualification as well, so I understand how mortgages work, but I just focus on the insurance bit. So yeah, it's taken a little bit of time, but the examples I've given here today I use with clients as well, and more and more people are seeing the importance of it. The market can change, and your tenants are paying the interest, not the capital. If anything happens, do you have enough money to pay off those mortgages when the time is due? It's just making clients be aware of that.
I think it absolutely is, and I think it's a good understanding from your point of view, is they're advising why they're doing that in the first place. Why are they taking that buy to let? Why are they sort of looking at portfolio lending and having growing a portfolio? What is the reason? But there will be some motivation behind that. Generally, isn't there? Was that fair
Yeah.
to say? Yeah. So that it's about understanding that and then educating with the consequences of what can happen and what happens if, like, say, the capital's still outstanding, the mortgage is still there, so they're only servicing the interest, like you say. Absolutely. So when you look at, so in terms of, from your point of view, what percentage of your time is spent working on sort of like the more business protection aspect rather than the personal side? Is that all business stuff that you do now, or is it a mixture, or?
Yeah, it's a mix at the minute, but I do want to do more of the business space because I just feel from my corporate background, I understand it more, and there's a massive gap. So one of the insurance providers said only 1% of insurance is business, which is mind-boggling because there's so many SMEs, there's so many people, that have their own businesses, even self-employed, that just don't know. So, I've got quite a few clients that are dentists, plumbers, anyone that has a physical job. I'm very big on income protection. And, if you own a limited company, you can pay the income protection through there and it's more tax efficient. So some of my social media videos has now been more business orientated with that. Just to bring awareness, like a lot of people don't know what relevant life is. I've got accountants that don't know what that is, and all their clients should be having that. It just helps not just to ring fence a client, but again, you're protecting them. If they do have more directors, when you have the review, have you got shareholder protection? If the business is changing, if you've got a key person now that you didn't have before, that should also be on the review as well with accountants. So again, it's just spreading awareness, really.
No, I 100% agree with you, because I think I didn't know what the stat was, and thanks for sharing that stat about 1% of protection is from business protection point of view. Is because I think the reason why it's about education side of things is because it's not only about educating the clients. So you're out there obviously educating the clients, which is great, and we'll talk about the products and things like that in a second in not too much detail, but I wanted to go on to that. But then the amount of brokers that I speak to that don't understand the business protection side of things, is you understand why. So you've got really, it's a dual education piece going on. It's an education from a client's point of view of being aware of it, but it's also broker awareness as well. Because if I spoke to, if you did a poll on LinkedIn or any social media right now and then said, do you understand what the benefits of a relevant life plan are compared to personal life cover? Brokers they won't have a clue. They will not know. Most people.
No, you're right, and I've had quite a few brokers message me on LinkedIn for me to help train them. So I think that's a space where I can help, especially with new people coming to the industry as well, because I know exactly what it feels like to come into an industry with no clients and, you know, doing everything by yourself, social media, admin, networking, doing applications, doing the whole 360, it can be quite challenging. So that's something where, you know, a lot of people have asked me to do it. And now I think, you know, maybe the time is right to help that out, help people out, because once you do understand it, it's going to make your career so much easier. So in my first year, I never really understood income protection, and the policies used to be really high. But then I did loads of, you know, CPD and spoke to different brokers and have a better understanding. And now it's a product that, you know, I'm quite confident in advising on. And it's how you position it. So how can you go from positioning something that might cost £5 or £10 to then £300? And why is the clients taking that? So again, it's just the education piece that I spent, you know, a lot of months and years, you know, trying to perfect, and now I completely understand it. And it's something that I want to help other people as well, because the more people that are aware of it and the better the advice is, the better it is for the whole industry. You know, mortgage or protection, it doesn't matter. You know, if a mortgage broker wants to get better at time protection, I feel everybody wins, to be honest with you.
No, and it's a great way of thinking about that, because not everybody. That's quite unique, Adrian, to be fair, because not every single mortgage broker thinks like that, because they don't help each other out. And I think if people are reaching out to you, mortgage broker wise, and you're building those relationships, then they may either want to educate themselves or at least refer to you, who specialize in niching in that arena, because the gap is the gap is huge. And they, like you said before about learning about your IP policy, there's that many different terminologies, bits of jargons, and variations with all the different providers from a personal protection point of view. They don't even want to start with. So we've got the mortgage criteria going on here, and that's difficult enough to keep up with. Then the protection criteria, and then to throw that into business protection as well. It's like, well, I don't want to. No, I don't want to learn that side of things, where people do, people don't. But then you are, that's great if you are you're finding quite a lot of brokers are reaching out from an education piece as well?
Yeah, I think so. Because again, that's why I started doing the educational videos probably like a year and a half ago, just because I didn't know what these things were, even though I've been in financial services my whole career. So I was thinking, if I don't know what it is, then loads of people don't know. So that's when I started out putting the content. Again, it was for awareness. And the positive thing is, yes, I've got clients from the back of it. I've done, you know, networking events, sponsorships off the back of it. But again, it was just more to educate people. And now it's like, you know, how many years in, and everyone's saying, can you help me with this? Can you help me with that? I'll think, okay, fine. I'll just try and educate people that way, because I'm really passionate about everyone, you know, doing it. It doesn't matter if you're a protection only or a mortgage broker. Like, the more people that, you know, take protection seriously and give good advice, the better it is for, you know, the whole industry. I feel so. Yeah, it's definitely something that I'm looking to do this year.
No, I agree with you. I think it is there's a massive gap. It is about educating the mortgage brokers, educating the clients, which obviously you're doing. But educating the mortgage brokers, there's very few people that are doing that in this space. And I think, like I say, fair play to you from your point of view. How long have you been focusing on the business protection aspect?
Probably like a year, but I've made a more conscious effort this year to do more of it. So hence my social media content is now more business focused and personal. I'll still always do personal, but you know, what is key person insurance? Most people assume it's going to be the director or the owner, where it could be an IT developer, it could be a top salesperson. You know, it's not just, you know, senior management, shareholder protection. We have so many directors that have other directors in their company. I just say, look, if one person passes away, their spouse can inherit 50% on shares, and that person can come in and make changes to your business. Or even worse, sell your shares to a competitor and you've got nothing that you can do about it. That's a massive education piece, not just for advisors, but even potentially solicitors as well. I think executive income protection as well was a big one for me. You know, you do it through the business, you can get up to 80%, whereas if you do it in your personal, it's 60%. That's a massive, massive difference there, you know, and you've got national insurance and pension contributions as well. So just from a tax perspective, it's better for the business also. And it's not always, you know, if you get hit by a bus, you can never work again. I tell clients, you know, you're likely to suffer from stress and anxiety. You know, we're all in the same boat here. We're all self-employed. It's hard. You know, we don't get any statutory sick pay. So again, for me, doing loads of CPD on income protection, that's probably one of the products I feel most confident in, whereas before I didn't touch it because I didn't get it and I just thought it was really expensive. But now I understand how the product works. A lot of clients have it, and it's fully comprehensive. So what that means is if someone was to claim an income protection on their policy, they can potentially get that payout until they're age 67 or 70 years old. And that's how it should be positioned. But like I said before, when I first, saw how much it cost, I'm like, I can't sell that. No one's going to pay that. But then it's how you position it, and that's the thing. It's not just knowing what the products are and who the best providers are. It's how are you getting that across to the client. That's the biggest thing. So I think my first income protection policy, maybe 3 years ago, I had a farmer that lived in Wales. I just said to him, look, if you break your arm, break your leg, you're the only person that provides income to the family, like you're all going to be stuck, and I was like, how would you feel if you couldn't, how are you going to survive if you can't pay the bills? And then, we ended up doing a 6-figure income protection policy. My director's going crazy because like, how have you got a farmer that, no one can really understand what you're saying? How have you managed to get that? I'm like, look, it's income. What you do is you're the biggest source of income. If anything happens to you physically or mentally, then that's going to stop and affect the rest of the family. So once you know how to position it, that's it for the rest of your career. That's why I just feel the training that I'm going to do. It doesn't have to be very long-winded. It won't take years to do. It's just getting better at it, each day. And once you've got it, it's a lot easier.
I think that's it. Like you tend to find that brokers can concentrate too much on the product. So, what is TPD, waiver of premium, and all the other bits of jargon that come along with protection policies. Clients don't really care about that. They want to understand what the consequences are. It's like with the same with anything. What are the consequences if you don't have this policy in place? This is the consequence, and this is the risk. And are you prepared to have that risk day in, day out for the rest of your life or for the next 5 years, 10 years, or wherever the case may be? And I think brokers trying to sort of confuse clients sometimes and more get hung up on the product. So like you say, it's not income protection, it's like long-term illness, it's not kick, it's sort of serious illness. I mean, so you're trying to educate the clients without the word jargon, but it's about some people. Do you find that people shy away from consequences because it's an uncomfortable conversation? Is that how you sort of see it sometimes?
I mean, potentially. I mean, even with me, I don't even use the word insurance just because the connotations it's got. It's wealth protection. Because it's like, oh, what does that mean? That is a thing as well that switches people off. I also feel with some of the brokers that have spoke to me for help, they will email the client. Let's say they've got 3 different providers with 3 different policies. They're sending 9 PDFs to a client. They're not going to read all that stuff, and they'll just switch off, or they'll say, "Oh, just give me the cheapest," when the cheapest isn't necessarily the best. Would you drive a car that is not reliable, can break down, or would you spend something more expensive that won't break down? Or which one would you pick? And that's the same thing with insurance. So sometimes you're right. If you're getting too much in the detail and too much in the documents, it's going to turn the clients off. They're coming to you as the expert. They expect you to know all the answer, give them one solution instead of 9, and then they get sometimes bogged down. It's too much, and they just leave it.
Yeah, and I think it's missing that point about that it is about advice and recommendation, even from a protection point of view. It's just as important from the mortgage point of view. It's just important from the protection side of things. That it's still your advice and your recommendation. That's what they're paying you for what. It's not a case of, well, there's 9 policies and which ones, because like you said, people are just going to go for the cheapest. Everybody would. It's like with car insurance. If you look at like that comes through and you come about looking through what the cover is and what you get and all the different permutations with car insurance, you're certainly not going to do that with the personal protection as well. So absolutely, I think that.
But with your point as well about knowing the products as well, that is still important. So let's say I recommend a critical illness policy, and it's more expensive, the cheapest one. If I'm saying this is the only provider in the market that does this one thing, that's why you're paying X amount more. That's a massive difference. I've got a client that I'm calling at 1 o'clock. He said quite a few people in his family have passed away from cancer. So, I'm going to make sure he's got the most comprehensive one. And if he needs to get treatment abroad, he can do that. Same thing with income protection. This is the only provider that will give you X amount and these benefits of you get to see a physio, you get private prescriptions, you get this, you get that. That's you justifying your recommendation. It's not just I'm going to give you the cheapest because it's the cheapest. Like it's not. You've got to give the best product for the client, not the cheapest. Sometimes, yes, the cheapest one will be the right case for your client, depending on their budget. But if you've done the fact find, you've done the expenditure, they've got X amount, you've got more products to choose from for them. It shouldn't be default always cheapest, because cheapest isn't always the best.
No, it's always about the client's needs and it's obviously the budget comes into it, but it's about what their needs are and understanding what the different products are that are right for that client, because there might be certain things in there that if you don't talk about it with the client in terms of certain policies, have certain things built into them or extra for them, if you don't cover those with the client and that's important to them, and you don't talk about it, you just gone for the cheapest, then you're not doing the right by the client. And the thing is, with everything that I talk about, it's about building a long-term business, like career, like with mortgage broking. It's long-term. You're building long-term relationships with your clients, and so you've got to do right by them every single time. And it's not always there you go, that's the best thing, is your product transfer. There you go. It's a quick, easy thing for me, quick, easy thing for the client, or protection, or whatever it is. It's about making sure that it's the right thing for that client, not necessarily the right thing for you. And I think if you're not educated with the products that are in the marketplace, then you're not maybe not doing that. And like I say, I'm not sort of saying you need to know. You're right. You need to know the products, absolutely. But if you don't want to know those products and don't want to do that, then it's okay to hand over to an expert like yourself that does want to know about that, and let's just and work with. You're working on that aspect. I've done the mortgage side of things. I understand that side of things, and that's what I'm doing. And now I'm handing over to you. That's a specialist there for you. That's okay to do that. It's down to how you want to build relationships with your clients, I'm guessing.
Yeah, and I think some people might see it as a conflict of interest, but I'm never going to do a mortgage, even though I'm CMAP qualified. It was just to understand what it meant. That's all. And you're right, being a specialist. So me speaking to all the providers last week with regards to business insurance and relevant life, there's one provider in the market that doesn't need financial multiples. Now that's massive, because sometimes people are self-employed where they won't take salary, they won't take dividend. But then obviously compliance with that saying, well, they only earn £12,000 a year. How are they going to take out, a six-figure or seven-figure, insurance policy? But for me, specializing in it and speaking to all the providers, finding out, okay, this is the one provider that, you don't need that. That's going to be now a yes when it could have previously been a no. And then, compliance are aware of it. It's all been signed off. That's just from me going the extra mile. And it helps people because there are going to be some limited company directors where, the financials aren't going to be that great. There's a provider out there that will cover you. So same with mortgages, right? There's going to be specific lenders where people who've got bad credit, they will still lend to. There'll be some lenders that won't touch anyone with bad credit. It's you being the expert. You need to know these things.
I think one thing that I wanted to talk about from a business protection point of view, because like I say, it's not something that's talked about much, and there's not many brokers that are educating it. There's a massive gap. Like I say, I've said that for quite a number of years about the gap in the business protection space from an advisor point of view, because brokers don't want to sort of look at that. Are you finding that your typical client, is there a typical client? Is it a sole trader, or are you into big businesses, large corporates talking about it? Is there a typical one?
For me, it's a mix. So it could be, just one person, limited company, that's fine. And then obviously you got the bigger corporates as well. But like you've been saying for the whole conversation, it's getting sure the client understands what they need, giving them the best advice. So it doesn't, I think sometimes people get scared of the figures, but I think for me, my whole career has been big figures. So I'm not phased by it. I prefer it. For me, the bigger the better. That's why I want to, be big in business protection. And even, a personal perspective, let's say the policy comes to £200 a month. Some people might be scared saying that, and they'll talk themselves out of it, and they'll just do the cheapest when, if you've done, the research properly, maybe another product would be better for the client. It's not to do with prices. Is it more comprehensive? So I feel with this industry, if it sounds a bit too expensive, people get scared. as well. So that's on the advisors, not the client.
And do you find that, like, obviously the big thing for you is about educating clients, about educating brokers. Do you find that actually once you get in front of the decision maker, you convert most of the times in terms of business wise? Once you
Yeah,
understand it?
yeah, definitely, and that's why I do enjoy protection. I used to do recruitment, so you've got to try and get through to the HR person that needs to sign up the line, and then someone else. This is if straight to the decision maker, and they can make a decision there and then. That's what I prefer, definitely.
No, I did spend a bit of time in recruitment, and yeah, that was one of my frustrations. I didn't last too long because it was, but I think not so much getting through to the decision maker, but then you're also relying on people, your clients, which were like obviously people looking for roles. So anybody in recruitment, I take my hat off to them because yeah, it's not something that I enjoy doing. I didn't last too long in it, to be fair. So for various reasons, but
But I
aside,
feel I feel anyone that does recruitment would do really well in protection,
yeah,
100%.
yeah,
If they
that's
want to change careers, they would do really well in protection.
Like, you're absolutely right. Because I think the thing is with recruitment, if you can make it in recruitment with a product that is unreliable as people, and I mean that in the most positive sense of the word, um, because you are trying to get the decision maker and something that's maybe not in your control. Whereas, obviously, from a protection plan point of view, most relevant life plan, key person, whatever, he's going to do what he says on the tin. So, once you've spoken to that decision maker, you can have the confidence knowing that, well, yeah, this is the right thing for you, and they're going to turn up, and they're going to show up for their interview, and they're going to be there when you need them. Kind of thing. Whereas, from a recruitment point of view, that's not always the case. So,
Yeah.
you're right. It's a good point. But one thing, and I want to get your experience on it, was one thing. My experience on business protection is that once it's in place, it tends to stick. And I've never touched wood. I've never seen a clawback on business protection yet.
No, I think that's a great question. Again, that might be another reason why people don't want to do it. To help reduce the clawback, depending on the company you work for, you can potentially get the business to pay for the premium all at once, instead of paying monthly. So again, reduces clawback.
That's a good point. I never thought. Like, obviously, from a business point of view, they can pay it all up front, can't they? So then, to then stop having clawback. And from a tax point of view, that's going to benefit the firm, I'm guessing.
It's just easier, they paid it all at once. They don't have to think about it. So again, both sides win. You've got a client that's happy, and they only comes out the account once, and then you're reducing clawback. So I think it's win-win basically. And then sometimes as well, when the figures are higher, they prefer to do it all at once than they want to see it every month. So it depends really.
No, it's a good point. And that, I like I said before, when you sort of talk about your typical client, that is quite mixed. And I think that is across the mortgage brokers I talk to. You've got ones that will talk about to sole traded, but I know brokers that have gone into large corporates and done presentations and won the business on the back of that and had a very good income over a long period of time on the back of that because they've built that relationship up. And that's the thing is with firms and business owners just want somebody that they know and trust to work with. And so when you talked before about the consequences, they don't want to feel as though, unless you tell me different, they don't want to feel as though they're being pitched to or sold to or anything like that. It's just understanding this is what my needs are. And you're educating them from a consequence point of view, and you're educating them from a product point of view. They just want somebody that they know and trust. Is that your take on that as well?
Yeah, I think the reason why I've done so well is when I speak to clients, I'm just like you, like property clients. I pay for property training. I set up my own property course. So I've got property. They get it. It's not some random person calling them trying to sell them something. So whatever they're trying to go through, like I understand it. Even with life insurance and losing someone, like the aftermath that no one talks about. I know that having a limited company, I've had a limited company when I was working for HSBC, IR35 and how you get taxed. So I understand all those things. So I feel clients look at me differently from other people in the market where I've done exactly what you're doing. I'm not trying to pull the wool over your eyes. I think that's what's helped me. So again, everything that I've done before has really helped me with this role. I think it's a combination of everything. It is, recruitment, it is corporate, it is, a lot of LinkedIn, it's a lot of networking all in one really. So I think that's why I'm in this position that I am, and I'm very proud that I won Advisor of the Year last year at my firm out of 200 brokers. I've won the Dr. Mariners Barnard Award from Scottish Widows for contribution to social media. I work a lot with Vitality and Legal in General. I've helped them with their podcasts, and we spoke about business protection on there and how people can get in. So my advice, if you do want to start in business protection, relevant life and exec IP, I think are the easiest ones to get in. You don't have to do key person or shareholder protection.
I think, and like I said, testament to you in terms of the awards you've won, and that, and I'm getting from you that it's not about, obviously the awards are important, the feedback important that you're getting, but it's all about the outcome for the client. That's why you're educating brokers. That's why you're educating clients. The awards will come on the back of it, but it's about the sharing what you're doing with the education piece that will put you in good stead with everything else. And I think, are you finding that with regards to business protection, one platform does well from your social media, or is it just a mix of everything?
Yeah, good question. So I spend most of my time on LinkedIn, probably Instagram second and Facebook third. TikTok, I know I should have started that years ago, but yeah, sometimes it is a lot. My advice is to pick one social media platform and then just get comfortable on that before you migrate to something else. And also, sometimes people think if I post, I'm going to get a client straight away. I've got clients where, they've seen me for years and only now they've decided to come along. So it takes time. But for me, just always being there, always adding value. It's not sell, sell, sell. I never, talk about specific insurance providers. I never talk about price. It's what the product is, or maybe you're at this stage of your career, business, or life. This product might be suitable for you. So yeah, I'd say always add value, and it's going to take time. But I have got clients off the back of it, and I feel with this industry as well, specifically protection, if you do a good job, you'll get referrals, and if you don't have referrals, you're not going to have a business very soon. So every client I know I have to nail it and be great. There's some clients that don't proceed, but will still give me a referral anyway. That's why I prefer. So I haven't even placed them in, for insurance, but they've recommended me to a family member or a friend. And yeah, and that's what's going to make the business sustainable is good client service.
Absolutely, it is. And like I said, from looking at your social media profiles, I understand probably why LinkedIn is probably the number one for you and where you're at. But I think, like I say, it's just about education. You're not pitching. There's no real sort of selling that, because it's not. That's not what you're doing is about in terms of it. And I think the thing is as well, do you read, like, your content's evergreen, isn't it? Like, you're talking about the stuff you're talking about, it's evergreen content for you, which is another bonus of being consistent with your social media. You've always got those posts to repost time and time again to your new audience as it grows.
Yeah, and you're right. I wanted to make, like we said, insurance, there's a lot of jargon, it can get confusing. How can I talk about relevant life in 30 seconds? How can I do exactly? That's what I'm doing. So anyone, even if you're not, thinking about insurance, you're not in a business. Oh, that means that. Okay, I get it. And then it might be, they say there's 7 touch points for a sale. I think now it might be 14 because everyone's so distracted. It's even more difficult now. So people need to see you more frequently anyway, because they're probably on a different app while they're listening to you anyway. So yeah, I just want to be consistent with it, basically. And I also feel as well, some people might feel they can't put social bits on their LinkedIn. I think you should do that as well, because people want to know you as a person. So if I go on holiday, I'll post them on holiday. I know some people don't want to see holiday pictures on LinkedIn, but it's social media. They want to know you first. I can't talk about life insurance every day. That's boring for me, especially clients. So that's why I try and mix up a little bit, get some things of my life and my personality out there a little bit more. So it's good to have a balance, because you don't want to go to the other end where every 2 seconds you're posting you're out, but you're not doing anything of business value. So yeah, trying to get a mix, I'd say, is important.
No, and it is, and I can sort of see that from. I think that sort of puts people off putting content out there in terms of, because they're not sure how they can talk about one particular product or one topic within a short space of time. And you are doing that, so and fair play into. And you've been doing that consistently for quite some time now. So obviously it's reaping the benefits to you and your business. So it would say that, and the feedback that you're getting from your clients. So fair play. Is it, Adrian, is there anything that you want us to talk about that we've not talked about on the podcast? Because we've gone sort of 40 plus minutes now and time has flown.
Yeah, if anyone's struggling and needs a little bit of help and stuff, I've got the capacity to help people as well. I'm going to make it a lot more structured. So with your point, even social media, I wouldn't say I'm a social media expert by any stretch of imagination. My stuff isn't the most complicated or glamorous, but again, it's being consistent in what things will people enjoy or value. I think that's the key bit, because I think sometimes people do get distracted. So I felt there was a phase on LinkedIn where there was loads of TikTok dances. I think that's kind of stopped now. It's fine if you're getting a laugh and business out of it, then fair play. But for me, that stuff is it's cyclical. The stuff, like I said before, I want to put out where it's going to be evergreen, where someone could look at my stuff in 5-10 years time, it's still going to be relevant. Also, depending on the company or the network you work with, making sure it's compliant. That's why I make sure my stuff isn't controversial. I feel my stuff is vanilla, but vanilla for me works. If some people do want to do things a lot more creative, hey, fair play. We've got people dressing up in costumes and doing acting. Like that's great. That's just not my personality. I don't think I can do that. But as long as your compliance team is happy what you're doing and they check it, then I think it's fine. Basically just check with compliance, basically.
I think, and you're right. I think it's sort of, for you have got that consistency. You are educating people, but I think it's, you've got to look at your demographic of your client as well, in terms of what you're niching in terms of the business owners and folks on the business protection side of aspect side of things. It's sort of then not, it's having that sort of giving your authority in terms of doing what you, and they can sort of see that from your posts and building that trust with that client, because then you're not going to turn up in a first appointment or a meeting or some interaction with that client looking any different to what you do on your social media profile. So, which is important. That's the important from that point of view. So, and as I always sort of say, we'll make sure that anybody's looking to reach out, we will make sure you tagged in. All your social media profiles have been to the post when the podcast goes out, so people will be able to find you and just start to follow you, connect with you, and reach out if they do need help. And from an education point of view, then or a referral point of view, then I'm sure my clients and their clients will get looked after by you from the business protection point of view. So excellent. Adrian, thank you so much for your time. Thanks for agreeing on the podcast, and thanks for just being total open, honest, and running with no agenda as always. So I really appreciate that.
Thank you for having me on the show. Appreciate it, Craig.
No problem. And I'll speak to you soon. Thanks so much, Adrian. Thanks. You.
Bye.
Thank you for listening to the Mortgage Broker Broadcast, the podcast which helps mortgage brokers at all stages of their mortgage broking career. If you have any questions about this podcast or any topics you want us to discuss, or if you're interested in working with me further, then please get in touch.